Here we go. We have the final panel of the day, which will be on a very interesting matter, which most people that are working in the blockchain industry will be interested to hear more about. And that is the accounting for and auditing of digital assets. I'd like to introduce the panel moderator, my close friend and Alexis Nicolaou, the director of DLT at the Grant Thornton Blockchain Cyprus. Welcome, sir.
Nice to be here.
Very glad to have you.
Thank you.
Then I'd like to introduce the next panelist, which will be Viktoria Saltez, the CFO at Sigma and Malta Blockchain Summit. Round of applause there. Hey, Viktoria. And then we have Georgina Kyriakoudes, the CEO of Decentric Solutions, with us as well. And the final lady on the panel, well, except for Alexis, is Xenia Neophytou, who is the founder of CX Financia. So if we can have a round of applause for the guys.
Hi, Xenia.
And I'll leave it with you, Alexis.
Thank you very much, Bogdan. It's funny how accounting and auditing always gets the last slot in a day. There was the same in, when was it, Decentralized, I think, in Athens a few months ago. Accounting and auditing might not be the most exciting of professions. However, it is a necessary evil. Every company has to account for its transactions. Every company has to file financial statements at the end of the year. And every company has to file a tax return. And for all those aspiring founders of companies on the blockchain out there, it's good that you know that at some point you will have to go through that process as well. And it's good to know that in that process you will have some professionally qualified advisors that will guide you through the complications involved in the process. And what makes things a bit more interesting is the fact there's not really any guidelines out there from the industry's governing body, which is the IASB, International Accounting Standards Board, guiding accountants themselves as to how to treat these assets. Let me start off by asking the panel, there's a bit of a misconception out there that crypto assets are exactly the same as cryptocurrencies, which is not really the case, ladies, is it? Georgina, would you mind sort of elaborating a bit on that?
Yeah, I think that's a really important part to start with. I mean, we tend to use the term cryptocurrency kind of just to cover any crypto asset, any token that we hear about. But really, in order to start having things fit into regulation, which isn't just accounting regulation, but tax regulation, legal regulation, we need to start being more clear about what are the purposes of these different tokens being issued and what are the different meanings behind them. So, I mean, the way I see it is there are sort of 3-4 different categories that we can fit them into. One is the clear cryptocurrencies, and just like we had a talk this morning defining what is a cryptocurrency, and there we're talking more about money, so we're talking about does it have a store of value, is it a unit of account, is it a medium of exchange, and so there we would at least hope to argue that, you know, maybe Bitcoin, for example, would fit into that, although, again, it's nothing's clear at the moment, but at least in principle we could say that. We can then talk, let's say the other term we hear a lot is tokens, and we have both utilities tokens, so again, a completely different purpose, the purpose to be using a platform and sort of access to a platform and a service. And then we have securities tokens, which again, is a separate use, the purpose being an investment vehicle in order to earn some sort of money. And then the sort of less talked about one is probably crypto commodities. So commodities we normally refer to as tradable raw materials. And generally when we talk about commodities, we're thinking gold, grains, oil, and we're thinking physical commodities. But more and more, in order to create our products, we need digital commodities, and one of those categories is going to be crypto commodities. So for example, you could say that Ethereum, you need it in order to power your smart contracts for your business, so could you consider that a commodity? So I think it's important to see that there are many different elements that fall behind this term crypto assets, and that using it interchangeably with cryptocurrencies is a bit of a misconception. Do you guys agree?
Yes, I couldn't agree more with you. And as the previous panel said at the morning, it was a very interesting part that the securities, even the securities, are not treated equally around the world. So in the US, the security is what it looks like a security, how it acts like a security. Then it's a security based on how we test. However, in the European Union, the definition is completely different. It's the tradability of the actual security. So as long as the definitions are not clear worldwide, it's very hard for us accountants and auditors to actually break it down to the level of the client's business and evaluate each of these assets, these cryptocurrencies, crypto assets, and put them in a category, because we are not even sure of the definitions itself. And as you mentioned, that the IFRS is not giving us guideline as of yet. Obviously, there are plans to create different rules and regulations in the future, but as of today, even the definitions are not clear.
If I might just take on from the last point you made, Victoria, given the various definitions we may give to these assets, would that make a difference as to the accounting treatment of these assets? Would we classify them based on their nature? So will we go through the existing IFRSs and look at the characteristics of these assets based on those IFRSs and decide this is an intangible, this is an investment, this is a stock item? Is that something that an accountant would do in the absence of guidance, of official guidance?
Definitely. That's what we are forced to do right now. We are forced to put each of the questionable securities and assets into an existing category, not actually considering the technology behind it, because that's the best that we can make out of the situation. Is it correct? I don't think so. So everybody is urging a common language, creating a common understanding of all these crypto assets and cryptocurrencies. What we can do right now, see how they behave, what are they used for, and try to account and audit them accordingly. But it's not necessarily the best treatment.
Xenia, you have a number of clients coming through your practice. Assuming a company that's just had an ICO came through the door, and they said, please help us. First of all, how do we treat all these proceeds that we got from our ICO? How do we show them on our balance sheet? Is it a stock? Is it a prepayment? Or what would you go through in order to evaluate and sort of give your professional statement on that?
So the question is about how to value the accounting, or how
exactly.
to give
a company
advice.
that carries digital assets, crypto assets onto its balance sheet.
Like the previous lady said, it's like because the standard doesn't give a specific guidance, a more principle-based approach is followed, where you have to understand the transactions and the functions of the assets, and according to that, apply the relevant standards as they apply. And then you do like a thought process where you say, is it a cash category? And then it is categorized into that IFRS. Is it a liability? For example, when there is an ICO and there is a pre-token sale, you could categorize the asset as a liability to the client according if there are any contractual liabilities of the company. So you have to read the white papers of the client and the ICO to see if there is a contractual liability there and classify them accordingly. Or, for example, if it's a financial instrument, there are different categories. So you have to take like a thinking process to go through. And in many cases, there are hybrid cases. There is no specific treatment. So you have to give a proper justification for this. And also to the accounts, it's important to show disclosures, explicit disclosures. So you have to understand exactly the model of your clients and show in the balance sheet the right notes to be shown. Also, another thing that we have in the financial statements is how to treat crypto assets for a financial or custody, if they are considered on balance sheet or out of the balance sheet, these assets. this is another tricky area that we encounter. So there are a lot of different things that we have to challenge ourselves. And that's the thing we have to keep updated with this new technology and all these new things.
Thank you. Just to make things a bit more interesting, as the two things that we are taught when we do a training to become accountants is that there's two things certain in life. You die and you pay your taxes. When it comes to the tax element of these assets, of the coins, from an asset holding basis, from a transactional basis, there's obviously differences in legislation out there, whether you're based in the US, even within the US, there's differences between the various states, whether you're in Europe, etc. What is your take on that, Georgina?
Well, I guess tax is a slightly different approach. With accounting legislation, we're trying to look at the regulations and we're trying to apply it to make sure it can go into the balance sheet or into the accounts and be understandable and comparable to other companies. Tax, as actually Viktoria was saying earlier, the governments are trying to maximize the tax, and the tax accountants or tax lawyers are trying to minimize their tax. So it's that's what we want from them. And so it's much more about, again, taking a principle-based approach. There is no clear guidance, so we need to understand more the substance of the transaction. So, for example, one token for one person could be treated in a completely different way as the same token will be treated for another person, because we have to look at more the substance of the transaction and try to be able to justify whether this is, as you said, a prepayment, a revenue, all these different aspects, ideally in the lowest tax regime we can find.
And it's very important to add that even though that we come clear with the case-by-case situation with the client, the tax office might not have the relevant infrastructure just to follow up and validate that whatever we say from the tax perspective is correct. And let's not just forget that obviously the tax office's effort and time and money has to end somewhere. So if the benefit that the tax office gets out of all these throughout investigation is less than the cost, then the question arises that does it actually worth it? And because everything has to be judged on a case-by-case basis, it could happen that for one client the tax will be determined differently than for another client. And it's a very sensitive issue. What we can do as accountants, we try to advise to the clients or the company that we are working for the best scenario and our view on the situation. It might be different than the tax office. Again, the question arises that if we have a disagreement with the tax office, is there any valid forum which validates that my point of view is more correct than the tax office's point of view? Not at the moment, because certain clients need a really throughout investigation in their infrastructure, in the technological side, which invites another audit, which could be the system audit. So there are so many questions around this area which are not really clear.
Okay. Trust is at the center of what blockchain is all about, and when the various interested parties in the financial statements of a company, the statements that are issued by the company they're looking to trust the figures that are actually included in those financial statements. How does the use of blockchain in evaluating those figures that an auditor is being that are put in front of an auditor, how does that change the work of the auditor? How does this change the confidence the various interested parties, like the taxman, the government, banks, actually have in those statements? How does the blockchain affect this element of trust that these parties put in the financial statements?
Can I?
Xenia?
Yeah. Okay. There are two sides of it. The one side is that blockchain and distributed ledgers are going to bring a lot of advantage to the work of the accountant, in the terms that the temperability of the ledgers and all that. It can create a concrete audit trail. And in terms of occurrence, when they test occurrence, you have you find immediately the transactions, and you can do it timely instead of doing a snapshot audit. So if the auditors understand the technology and all that, it's going to make their life much easier, but it's going to change the way they're going to do the audit. It's not going to be a tick box approach anymore. It's going to be a more value adding and to the clients, and that's why auditors also, and as well as accountants, have to upskill their product, meaning that they have to come into standard with the technology to understand it. And from the auditor's perspective, to be able to go behind the technology. Given that distributed ledgers, as we say, are tampered or whatever, they have to understand how blockchains are made, and maybe consult specialists in the area for that, because they have to give their clients assurance that the audits are good. And so there are different things. The technology is evolving, but it needs to be challenged by the auditor.
Can I add? So I think it's an interesting situation with blockchain because you have two different ways of looking at it. If you take the current way of auditing, which is okay, we need to do the tick box and confirm these transactions. In one sense, you have high transparency and high traceability, especially in, say, a public blockchain. We can go to a block explorer, we can actually search, the address and find the transactions related to that. So in one sense, that helps the audit process. Okay, it's not necessarily that simple because companies may use multiple addresses. Even from one public key, you can generate multiple addresses, so it's not necessarily going to be as easy as I put in the address and there are all my transactions. But then if you look at it on a sort of deeper level, and rather than just saying, okay, I'm an auditor, I normally have to check the books, right, there's no bank to go to anymore, so I'll go to the Block Explorer. If you look at it on a deeper level and say, well, why do I even need to look at this? If we've already, the whole point of the auditor is that I've gone to a company, they've told me these are the figures on my balance sheet. But no one else believes me. You have to be the one who verifies that I'm telling the truth. But if I've got a blockchain and already it's been verified by the other party, so let's say it's a simple transaction, a supply transaction, the payment's been verified, then the third party, the direct party who you've made the transaction with, has already done that verification. So what am I, as a third party, verifying? If anything, we can say, okay, we've even got triple entry bookkeeping here, and we've got the third parties who are doing the verification of the nodes. So we enter into this whole trustless blockchain system. And so the whole point of auditors coming in to verify that these records are trusted starts really becoming completely irrelevant. So again, it comes down to, okay, what do we do now as auditors? And what is the future potential if we actually understood this technology, if we actually applied it fully, then the whole system turns on its head.
Does that mean that auditors will become extinct, or that they will have to simply evolve and offer more for what they pay for, different services, more on a consulting basis rather than just ticking the boxes and verifying transactions and carrying out sample testing, etc.?
I think the audit as a function needs to evolve in something different, because we need to acknowledge that, yes, the blockchain will take over, the decentralized transactions will be validated by many nodes. The audit as the function of justifying transactions might get extinct. However, the consultant role and until the government is getting comfortable with the new technology and trust it enough to actually erase auditors is a long way. Okay. So we need to adopt, we need to understand how to evolve with the new trend, and obviously educate ourselves up to the point when we can advise to our clients the most important.
Okay, so need to become more tech savvy, basically. Sorry,
Xenia. And actually there are more issues that we are going to be challenged with, because there are also more inherent risks. For example, the anti-money laundering risk or forensic risk. This is something that we can advise or check upon the client and help with the client, because strictly speaking, okay, it's the distributed ledgers and blockchain is very good, but on the other hand, you cannot actually see the real beneficial owner and the transactions between different exchanges and different parties. So you have to be very careful. So this is where we can help the client and put some procedures in order to be able to be watchful against money laundering issues and etc. in the future. Yeah.
I think, as you said, one of the key issues here, like we'll be having to look at different matters, and for example, we said that fine, the transactions are trusted, but that means we trust the technology. So perhaps one area which we already do as auditors is IT audits. Maybe that will become, for example, a bigger function to make sure the internal controls are in process, because, for example, if an error goes through the blockchain, we got a problem because we can't reverse that. So there'll be new risks, but they're risks which need to be prevented using internal controls and making sure the IT systems are set up properly. So I think there'll be more focus on the auditors on IT audits, on internal control audits, and less maybe on the sample basis ticking exercises.
Do you feel that there will be regulation coming through shortly? I mean, the IASB will be forced to see the importance of these assets on a company's balance sheet so as to come forward with advice to accountants?
There must be. Obviously, there must be. We can see the different effort of different countries trying to be the first one or the best one or the most transparent ones. It's undeniable that the change is happening. So the governments cannot deny the fact that in a couple of years, majority of the companies will operate in a new technology, which is not necessarily blockchain, but there is something decentralized in the air, and they need to keep up with the technology, in able to collect their taxes and do their part of the audit on each and every company which is operating in their jurisdiction. So yeah, there must be.
Okay. Any closing remarks, Xenia?
Okay, I think distributed ledgers and blockchain technology is here. It's not going to go away. So, and actually, it's a very good thing, especially for me being in the financial services industry, as I'll see a lot of advantages working for it. In terms of it will increase efficiency, it will increase all these reconciliations, because if you bring all these related parties into the same blockchain, because now they're using the different parties different, they're on their own database. If they all bring it together, then there are going to be huge savings on reconciliations and all that. So I see from that perspective, it's going to have a big plus, and in so many other industries. So yeah, we have to embrace it, and we have to educate ourselves as auditors more to be close to the technology and evolve with it. So we are abreast, and we are there for our clients to help them and to able to give them the right assurance. Yes.
Thank you. Georgina?
I think, as we said, there needs to be some sort of more understanding on the regulation side, on the accounting treatment. There's a question over whether completely new accounting principles need to be developed specifically for this industry, or whether it's big enough now to justify that, whether it's the right thing to do to create something different completely, or whether we should change current regulations or, add more clarification. And I think, as we said, when it comes to the role of audit, there needs to be a fundamental change in what we're looking at. There are elements which will be solved a lot through blockchain, so that trust and reconciliations and all these areas. But then new risks will come in terms of IT risks, code risks. So again, I think like many industries, we all need to get even more technically savvy and make sure that our experts are trained in the areas which they need to be trained in.
Thank you. Thank you very much. Like we heard in the legal panel earlier on in the day, yes, there is a lot of uncertainty in the accounting industry, accounting profession, but this is a very, very young industry, and that's all expected. There's advantages in sort of growing up with an industry, and as accountants are evolving already, we're not fearing that our profession will become extinct. But we have realized that we have to be crocodiles and get in the water to survive rather than remain, final remains in years to come. Thank you very much.